Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening. What's going on with my camera? My camera now? Oh, okay. Good evening, everybody. How y'all doing? I guess I forgot to turn my camera on. Hey, man. How y'all doing this evening? Y'all doing okay? Hopefully you're doing okay. I just woke up from a nap, man. Feeling kind of good. Woke up from a nap, ate me a bowl of cereal, had me some Dino Bites, I think they called. It's like some off-brand version of Fruity Pebbles.
Yeah, I was about to say, we never heard of no Dino Bites.
they cover it's like a big old bag. They got like a little dinosaur on the thing. They taste like Fruity Pebbles. All right. It was something I got from Timothy. He was like, he went to the store one day and bought some. I'm like, why you got this off-brand cereal? He was like, I had them at my friend's house. He had some, you know what I'm saying, at his place, and they taste pretty good, so I just bought some. And I taste them. I was like, oh yeah, they do taste decent. They taste like Fruity Pebbles. So I ate some Dino Bites. Hey man, that ain't why y'all tapped in, man. Have y'all been going back and looking at the gems from the live stream, man? For those who don't know, let's get this out of the way first, man. Good evening. This first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Rania Grande. That's just me, big spot of you know hablo español. And you in tune to another episode of, speaking of the thumbnail, you in tune to another episode of the NQ Futures Price Action Recap. Yeah. Shout out the new thumbnail and the new intro. Right? Yeah, man. So, speaking of the recap, for those that don't know, whenever, I do the recap, what I do now is the next day I drop what I call gems from the live stream. One at 9 a.m., one at 12 p.m., and one at 3 p.m. Right? 3 hours apart. And then we go live at 6 p.m. to do the next recap. So you got 9, 12, 3, and then me live at 6. So what I'm dropping is, if you missed yesterday's session, if you can't just pull up for the live stream, or if you want to go back and just look at a specific part, right? Be like, man, I remember when Tim said this, yada, yada, yada. The video that drops at 9 a.m., that's going to be the video where we're looking at the higher time frame, right? Because the new format of the show is we look at the higher time frame, then we drop down to the intraday, and then we go down and do like a deeper dive intraday looking at the New York session. So the first video I drop is going to be the overall higher time frame, right? I don't know what the thumbnail, the titles, I asked Gemini to give me titles for like the videos when I'm posting the actual post videos, right? I asked Gemini to give me titles and descriptions and stuff like that, because I'm trying to help other people find the channel. So I'll be like, hey Gemini, look at this video and give me a SEO optimized title and description for this video, right? So higher time frame drops at 9. First intraday drop down drops at 12, and then the deep dive from the New York session drops at 3, right? So if you want to just look at a specific point, if you missed a live, or if you just want to share it with people, be like, hey, go check this out. Tim said some good stuff in here. Now you know the format at which the gems from the live streams drop. All right. And let's shout out to everybody that's in here. If I change my thing on this side right here, if I change this for the people in Zoom, did that change anything for y'all? It don't change nothing for y'all. If I switched it to that, is anything changing inside Zoom for y'all? It still look the same?
I don't see now what's supposed to be changing.
Okay, now I was just changing like how I like what I'm looking at over here, because it was just showing me just one little square at the top, and I couldn't see who was in here, so I switched it, and I was trying to make sure wasn't nothing changing for y'all. All right, man. Without further ado, man, appreciate y'all for hanging out with me on this Friday. You know what I'm saying? This was Don't Force It Friday, you know. And hey man, hopefully ain't nobody try to force nothing. Hopefully everybody was looking for signatures instead of feelings. All right, signatures instead of feelings. Speaking of signatures instead of feelings, before we drop down, for those that was on the pre-market analysis, hey man, how about them signatures we talked about? Y'all, everybody that was on the pre-market analysis, y'all remember what we talked about? When we talked about looking at the range, how we was in a sell program, look at the range, see if price respects the premium, key PD arrays. I don't know if y'all looked at it, but I paid attention to it. Without further ado, let's come over here and get up on that daily chart. This is our daily time frame. Okay. We are slowly extending the sale program, right? As y'all can see, we came all the way down here to a piece of liquidity. I don't know if y'all can see that. Let me make this larger just in case y'all can't see that. All right. Thicken that up. Make the text larger. All right. And if y'all don't know, that PWL right there, that stands for prior week low. Right? And you look over here, you be like, Tim, that look mad sketchy. What is that? This is a new contract, right? So when you go really far back in time, right, the price gets sketchy. Because if you look there from today's trading, right, that's 138 trading days away. 138 trading days away. Almost 200 calendar days. 199 calendar days. Right? That's a really long time. That's a really long time, right? So that's why the price looks sketchy like that. But if we go up to a weekly chart, can y'all see what that is? That is a swing low on the weekly time frame. Right? Swing low on the weekly time frame right there. Right? And some might say, Tim, why didn't you pick that low right there? Right? Why didn't you pick that low right there, Tim? Who can answer that? Why didn't I pick that low right there? Who think they know why I ain't picked that low right there? Somebody take a shot at it. Somebody take a shot at it. Somebody say something. Tell me why. Nobody gonna take a shot at it. Everybody quiet.
Why don't you pick which low, Tim?
That low right there. Right? Why did what made me pick this swing low right here and not that low right there?
Oh, I don't know. Oh, actually, you'll probably say because it was made while you were still there, and that green candle was during the expansion. That's why you picked that one, because you was leaving the area.
That's very good. That's very good. That's actually why that's not why I did it, but that is very good because this is when we're leaving that area right there. Very good. Y'all, hey, y'all got to get up for lump on that one now. Y'all got to get up for lump on that one now because I wasn't even paying attention to that when I marked it out. What I was paying attention to was the fact that this swing low right here, right, candle 1, 2, and 3 was created inside 2 previous PD arrays that were designed to act as support. Right, as we go to the left, the first would be that discount wick. Right, we got this huge erroneous wick. Right, so what do wicks do? Wicks do the damage and bodies tell the story. So at this time, while this wick was doing this damage right here, right, I'm only looking at this. Whoa, Joe, mute for us, Joe.
Yeah, that's my bad. Traffic is my bad.
Okay,
guys.
okay, little road rage. All right, so back to what we were saying. Y'all thank Joe. Y'all thank Joe if this segment don't get uploaded to YouTube.
Hey man, hey, I'm sorry, man. It was about the 5th transgression, and this dude acting like a. Anyway, man, I'm sorry. I'm sorry, everyone on the call. I apologize. There's no excuse.
Yeah, man, it's all good. We all used to it.
All right, so note to self: go in about 5 to 6 minutes and edit this out. All right, okay. So the wick doing damage right here. All right. So since this wick is doing damage, right? Although we watch this wick for, information on how price is going to react to it, when it comes to looking for liquidity,
I'm looking at it here because I'm just looking at this wick as a large wick that just did damage. So that's one reason why I'm looking at that low instead of this low, right? That's one. Two, right? This order block's job is to support price. So if the algorithm is coming down, right, I'm looking for it to take out some form of liquidity. And where's the liquidity? Right here below that low, right? Yes, we do have this wick here, but this is the liquidity that I'm focusing on because I'm ignoring that wick because it's just a long wick that's doing damage. And this is the liquidity that, because if I ignore this wick right here, now that low right there, right, we ain't got no swing low there. This is where the swing low is, right there. All right, that's why I identified that as the liquidity that I'm looking for price to possibly draw down into, because we've taken all this other liquidity last week, right? Last week we took that liquidity, all right? And then this week, when we went in and we were watching price earlier, when we dropped down to our daily time frame, we saw that Monday, right, we had gap down, traded up, right, and then started to come back down, right? Came very close to the low, right? But we hadn't taken it. And we said, I think we talked about this yesterday or day before yesterday, that this move here from Monday up to Thursday that gave us a bearish Judas swing, right? And we were saying we still were having a inside week, right? And because we've had an inside week, that means we hadn't taken any liquidity, right? And so we hadn't taken any liquidity. We got a bearish Judas swing in the midst of a sell program where we've just been here engineering a lot of liquidity, but we kept emphasizing that we're in a sell program, right? And so since we got a bearish Judas swing, we're looking for the sell side to be engaged. All right, so if we engage the sell side, what do we want to know when we're engaging even our buy side, sell side or buy side? What do we want to know? What can the algorithm do after we hit that? What's the first thing we want to think about? What if the algorithm takes that? What do we want to know? Y'all talk to me. Talk to me. Everybody quiet on a Friday. There you go, Kim. Okay, I'm tired of repeating questions. There you go, Kim. How far can it go? Every time I ask something, now everybody want me to repeat the question. That let me know even more. You ain't even paying attention to me. Ain't no paying attention to me. You repeat the question. How far can you go? Appreciate you, Kim. Whenever you got your eyes set on a liquidity pool, right? You want to know, once you hit that liquidity pool, how far can price go, right? And when we look over here, right, what do we have? We got that liquidity on the weekly time frame, right? We got the liquidity right there, right? So that's how far we can go. We can keep going, but we got liquidity right there, and we have that order block right there. Y'all already know I tend to not mark out my order blocks. I only mark out liquidity and imbalances, but I know that this liquidity is inside of that order block, right? And hey, as you see, I'm not saying, you know, I'm just a genius or I'm perfect, but as you see, price came down to that liquidity pool, and we got a nice bounce up off of it, and we closed back inside that low right there. Right, we closed back inside that low, and just looking at from the high, right, from the all-time high that we made back here in November down to that low, that's a 10% move off of the highest high. Now from the high from the close, right, when you think about how they report the all-time highs, right, from the highest closing price to where we closed at today, that's a 8.6% move. So it's well into correction territory. Well, no, 10% will be correction, right? 10% will be correction. So from the all-time highs, we're in correction territory. But from the highest close to the close today, we're at 8.6%, right? Right there, knocking on correction territory. Okay. So again, from the all-time high to the lowest low we made today, 10.3% off the highs. And this is for the futures. I'm not talking about the actual S&P or the NASDAQ as far as like the Qs. Just talk about the futures. All right. Now, so as we see, based off what we talked about on a daily time frame, right, that bearish Judy swing played out, and we went into the weekly low and into a prior week's low. So now we've come down and swept 2 levels of liquidity. All right, we've taken out 2 levels of liquidity and then traded back up and closed inside the weekly range, just inside of the weekly range, our previous week's dealing range, right? Because our previous week's dealing range was, the low of it was 24,212.25, right? And we closed at 24,217. No, 24,000. Yeah. Wait a minute. How in the world? Explain to me how this right here is 24,212. Oh yeah, cause I'm tweaking. Man, I'm tweaking. We closed we closed at 24,217.25, right? So we closed back inside the range. 24,212.25 was the low, and we closed 5 points back inside of the range. Now, depending on, who you ask, a lot of people go by, the close of the candle, closing in the range or out of the range. They put like a lot of weight on if it closed inside or out of the range, right? Me personally, I put weight on where it's closing, but I put more weight on what did it do prior to closing. Right? What did it do prior to closing? Okay. And what I mean by that is, okay, we came down into, where do we come to? Right? So if we come here and we're looking at this on a weekly time frame. All right. So we got a breaking structure here. All right, we got a breaking structure there. So since we got a breaking structure there, I'm looking at this as a balanced price range. Okay. And since I'm looking at that as a balanced price range, I'm going to look at the range from here to when we're leaving, right? When we're leaving that area, I'm coming here, I'm coming to my order block there, right? I have my fair value gap that's breaking away from this area right there, right? And then I'm going up. So this is the higher time frame dealing range that I'm looking at. So as we came up and dropped down, I'm looking to say, hey, we came down into a discount, right? Into a discount PD array that's resting here. This is at an octant level, right? This is resting at an octant level. It's not resting at a quadrant, right? It's resting at an octant level. I just happen to have this in the 8th grade, right? You don't have to have it in the 8th. Those levels look very sketchy over there to me. I don't know if y'all can see them all, so I'm going to thicken them up, right? And as we see here, right, we came down into a discount. This is our discount right here, right? We came down into a PD array that was in at an octant level, right? And we swept, we manipulated liquidity. Okay, so based off of those things there, right, now this closure back inside this range has more weight to me as saying, hey, look at the rejection or the discount sensitivity at this point, and then we close back inside. If you understand what I'm saying, right? I don't just look at it and say, hey, we close back inside, so that means that's a big rejection. I'm not solely putting the closure back inside. I'm not taking the closure back inside by itself and saying, hey, because we closed back inside it. No, I'm looking at what did we do and then cause that closure back inside. So I'm taking the whole thing into what's up, Michelle? Y'all say something to Michelle, cause Michelle done posted hey family 42 times over there. Let me stop. Michelle, how you doing? Let me hold on. Michelle keep posting hey family. Hey Michelle, how you doing? What you been up to, girl? Oh yeah? Oh man, that's good. We ain't doing nothing. We just over here doing a live stream. Know that, you know what I'm saying? We know that you came in. You know that you came up here talking loud, so we just decided to stop and, you know what I'm saying, start, you know, just talk just talk with you. You know what I'm saying? We didn't want you to keep spamming the chat. You know what I'm saying? We didn't want you to keep spamming the chat on us like that. So we did. Let's stop and say hey to Michelle. You know what I'm saying? All right, so yeah, that's you want to pay attention to everything that price is doing. Okay, everything that price is doing. So now, not only that over there, then we look and say, remember when we was over here engineering liquidity, right? We was talking about how, hey, we engineering liquidity and prices, you know, showing signs that it's kind of respecting bullish order flow. Like every time we create a down close candle, we come back, and when we create an up close candle, it closes above mean threshold of that candle, right? And we talked about that all up in here, right? Even over here when we consecutive, right, we close back above mean threshold. And here we go, we got 3 down close candles in a row, right? So we got down close, down close, down close. Okay, what do we notice on this daily time frame as we're coming down, and what do we notice on this weekly time frame as we're coming down? Let me show it to you again before I answer it. Look at how we're coming down here on this daily time frame, right? What don't you see? We talked about it already, right? What don't you see on this time frame? All right, we go to the weekly. What don't you see here? Right? Everything is overlapping. Everything is very efficiently delivered. Every time we extend down, we go back and overlap. We're not creative. We're not displacing away. right? We're coming back and overlapping, not leaving any inefficiencies, right? Yes, true. We have suspension blocks that we have in here, right? There's a suspension block right there, but we're not leaving any imbalances or fair value gaps, right? Everything is just being, you know, it's very efficiently. It's not showing a willingness to just blast off and displace and leave a fair value gap on the weekly time frame and on the daily time frame. So because the weekly is unwilling to just create fair value gaps, because the daily is unwilling to create fair value gaps to the downside, right? And we've eked out some sell side liquidity, and we've closed back inside of the range, right? Now I'm saying, okay, look at the discount sensitivity there at this anticipatory reactionary point in the discount of the move, right? Does that mean we can't? Does that mean that we won't come down to this swing low right here, right? Does that mean that we won't come down to this imbalance right here? No, it doesn't. That just means I'm watching, right? This is a signature that price is giving me that the bearish momentum isn't just rampant. We're slowly and in a controlled manner moving down to the downside over a very long period of time. These are weekly candles right here, right? So from January, the week of January 26th, all the way over to this week here, which was the week of March 16th, we've been slowly and in a controlled manner coming back down to a discount, right? And swept that liquidity. Okay, we pulled back to a discount here, went back up, right? Consolidated, set relative equal highs, broke down, came back to a discount, took out sell side liquidity, right? And now, boop, we're seeing some discount sensitivity there after sweeping that sell side liquidity at that order block right there. You say, Tim, well, we came down here and we swept liquidity at the order block. Yes, you're right. And when we went up, after we did that, what did we do? We came up here, consolidated, and then set relative equal highs. All right. When we came back down this time right here and we got that rejection up, what didn't we do? We didn't take that liquidity. We came down and set relative equal lows. All right. But now that we've come down and we set relatively equal lows, we traded back up to a short-term premium. We came down and we've taken those relative equal lows, and we've taken a higher time frame, if you will, sell side liquidity at a discount PDub rate. All right. So now this sell side has been manipulated in a discount. So now this could be a point where the algorithm starts to march back up the quadrants to come back up. This is how you see stuff in real time. You pay attention to what it's doing, and then when the algorithm gives you the signatures that it wants to keep going, that's when you act. But since we don't have any imbalances over here, right, outside of this suspension block, right, what do you use as far as PD arrays to use as support or resistance? You look back to the left side of the curve, right? You look back to the left side of the curve, and when you're looking back to the left side of the curve, we see here, right? Right, you got PD arrays. Where's my daily? Right? That's a weekly. I put the daily. Right? We got PD arrays to the left, and then if we notice there, right, we're blasting off, right? Right? As we leave this area right here, right? This huge suspension block right there, right? That huge suspension block, that's the first imbalance created when we're leaving this area, right? So on a weekly time frame, you can be watching this suspension block, right, to see if we get back above it and use it as a reclaimed gap, right? And what does this suspension block align with? This bearish suspension block right here, right? Bearish suspension block right there. Okay. So if price comes back up, right, you want to see on weekly basis, does it push through consequent encroachment, looking for closures above consequent encroachment of this. Right now it's an inversion fair value gap there. That suspension block there, we just created an inversion fair value gap, right? So we're now below an inversion fair value gap. So if we trade back up into it and fail to continue to break down, you're looking to see if we get weekly closures back above consequent encroachment. Okay, and if we start to get weekly closures back above consequent encroachment, right, now we're trading back up into this suspension block, right? Now we traded up through the suspension block there, traded up through the suspension block there. Then we've traded away from it. Now that we've traded away from it, coming back to it, right? If it's going to act as a bearish PD array, its job is to push us lower here, right? Because we've taken that liquidity there, right? We didn't dig very deep into it, but we've taken that liquidity there, and its job is to push us lower, right? Sweeping this, potentially coming down there. So if this inversion fair value gap don't push us back down, right, and we start getting weekly closures above that, right, then we're watching this suspension block. If that don't push us back down, and when I say back down, I mean beyond here, not just pop up and, you know, dilly dally, push us back beyond here, extending the sale program back beyond here, extending the sale program, then you get weekly closures above consequent encroachment of that, right? That is starting to show strength. Okay, that is starting to show strength. And then taking out that high right there, right? Now we've pushed through 1, 2, 3, right? That bearish order block. 3 PD arrays on the weekly time frame, right, that we've pushed through. If you violate 3 PD arrays, Michael says you tend to be on the wrong side. So if we violate 1, 2, 3 PD arrays, right, coming back up and take that high, then that bearish sentiment, you'll be like, okay, price has reached my invalidation point. When we talk about invalidation points, price has reached my invalidation point. Okay? Okay. I'll do me a favor, man. Hit a like for the algorithm. Subscribe to the channel if you ain't subscribed. Shout out Michelle Tucker, man. Michelle in the building, man. Shout out Father Legends. I see Father Legends in the building. I ain't seen Father Legends in a month of Sundays. Shout out Felicia. I see Felicia in the building. Do anybody got anything for me? Any questions before we drop down into the intraday time frame? Y'all quiet today. Did the algorithm punch y'all in the mouth today? Did the algorithm punch y'all in the mouth today? Let's drop down. Let's drop down to the 60-minute time frame, man. I think the algorithm punched y'all in the mouth. I think the cat got y'all by the tongue. All right, let's get rid of this weekly stuff we was talking about. All right, this is our this is the entire week here. This is our last week's range, right? This is our last week. That's the highest high, lowest low from last week, right? Right there. As we see, during last week, we came all the way back down into a discount of that range, right? If I get my Fibonacci tool and anchor it from the high and bring it down to the low, we can see that during last week, we traded all the way back down into a discount. That's the discount of that range, right? Traded all the way back down to a discount and closed right here. We opened up this week, right? Gap down to that lower quadrant of that range, right? Hit the lower quadrant, made our way all the way back up and took out liquidity just above the upper quadrant, right? What do y'all notice that about these areas that I'm talking about? Where do they reside, right? Where do they reside? Can somebody tell me what you notice about where these areas that I'm talking about reside? Huh? Do anybody notice what I'm talking about right there? All right.
At the bus stops.
Bus stops. Bus stops. If we let me take some of the bus stops off, right? So if I go to quadrants, right? For those who like to see what the fib settings be, these are the fib settings for quadrants, right? So we go to the quadrants. What do we talk about? The bus stops. What does Michael teach? The bulk of your trading opportunities are going to reside between that upper quadrant and that lower quadrant inside your dealing range. Okay? So our dealing range that we started with was our last week's dealing range, because that's a algorithmic dispensation in time that it understands. This is the highest high, this is the lowest low. Right? So we start out the week using that as our go-to dealing range. We're still trading inside last week's range, so now we can use that as a dealing range and make our trading decisions based off of that dealing range, right? And as we look at our bus stops inside that range, right? We opened up the week, gap down at the lower quadrant, right? Gap down the lower quadrant there, traded up, right, to equilibrium right there. There's a bearish fair value gap resting there. That's a coincidence, right? Created a bullish fair value gap right there. That's a coincidence, right? Traded up and took out that buy side liquidity, retraced back down right into that bullish fair value gap and that bullish order block there, right? Let's stretch this out a little bit for those who have maybe watching on smaller devices, right? I just like to keep it like get the whole, so you can see the whole picture at the same time, right? And if we come here and we do this right here, book, look at the bodies of these candles staying inside that bullish fair value gap. Y'all know that drive me crazy when that ain't the right color, right? The bodies are staying inside that, but let's inspect that a little bit, right? So as we came down, back down into a discount of this move right here, right? This is our latest expansion right there, coming from our order block there, all the way up to that high, right? We're coming back down into a discount of that move, okay? Where is that gap residing? At that lower quadrant. That's not an accident. That gap is coming in contact with that quadrant level right there. That's not an accident, right? Time and price is fractal. So we come back down into a discount of this small bullish dealing range right there into our discount PD array at that quadrant level, hit our order block, right? We trade down, we close just below consequent encroachment, trade into the order block on an indecision candle, and then we get right back above consequent encroachment of that imbalance. Indecision candle, then we take off, boom, get up out of there, right? Immediate rebalance, boom, get up out of there, right? Gone, get up out of there. That's not an accident. Time and price is fractal, right? Time and price is fractal. So, right, we come back to a discount PD array at a bus stop. You have bus stops here too, right? You got bus stops here too. And then notice, right? Notice here, even though, right, this range right here, we've come down and we got a new range here, right? All we did was extend this range right there, right? This range here got extended up, the overall range, right? But all of this right here is a balanced price range, right? All of this right here is a balanced price range. So we're not expecting price to come all the way back to the discount of the entire range. What are we looking at? We're looking at our latest expansion, right, of our dealing range. And looky, who stole the cookie? There's a bullish fair value gap in line with a quadrant level, a bus stop, right? And we come back down into a slight discount and we go, right? Man, boy, if y'all, hold on.
Let him cook! I said let him cook!
Boy, look at him. If y'all can't see it out of I don't know what to do, man. I don't know what to do if you can't see it. I don't know how many times I can say it. I don't know how many times I can say it. Okay, so when we opened up the week and we just looked at that was some examples of the fractal nature of dealing ranges, right? Because we looked at our weekly dealing range and we saw that how we were using the bus stops of the weekly dealing range, and then we went and just looked at all this intraday time stuff and looked at these dealing ranges on the intraday basis and saw how we were utilizing bus stops on those intraday dealing ranges. All right, are you seeing it? Are you starting to see the fractal nature of time and price, the fractal nature of everything, the fractal nature of time and price, the fractal nature of dealing ranges, the fractal nature of just everything? Did you get it yet? Hope y'all got it, man. And then once we went back up to the upper quadrant right there, like we said, we broke back down, right? And then yesterday we had come down and taken out the sell side liquidity, and we said that gave us what? Our bearish Judas swing. Now remember, we said that on the daily time frame, right? If we look at the daily time frame, we said that we traded up here and came back down there, and that gave us a bearish Judas swing. Now let's look at that on the intraday time frame to get some detail about it, right? See that little dancing man there? That's what I just drew out, right? So open up, traded up from the lower quadrant to the upper quadrant and took out buy side liquidity, right? Once we took out buy side liquidity, when we trade to those extremes inside the range, that upper quadrant and that lower quadrant, right? What do we anticipate? We anticipate possibly a deeper retracement, especially if we're anticipating this move to be the manipulation, right? So because you're in a sell program, right? Anytime we start going up, you anticipate the move up to be manipulation, right? You're just anticipating it, and you're watching for signatures to see if that confirmation comes to fruition, right? So when we come up to our upper quadrant, right, and we hang out here for a while after taking out liquidity, and then we get boom, that breakdown right there, right? Now that we got that breakdown right there, what are we looking for? We're looking for price to defend this area here. Why? Because this right here is a balanced price. Remember, we talked about that, right? You got a balanced price range that you left. If you're above a balanced price range, you anticipate it to act as support if you're bullish. But if you cut through it, hey man, shout out Valdez. Shout out Valdez. Valdez sent me a DM. And the boys was watching one of my videos and they was cracking up because of something that I said in the video, man. Shout out hey man, Valdez kids, if y'all watching this, I appreciate y'all for always tapping in, man. Always hanging out with Uncle Tim and the gang. I appreciate y'all, man, and I salute y'all with both hands, man. Y'all give it up for Valdez kids, man. Now, back to what I was saying. All right, so we cut through this balanced price range, like just cut through like a hot knife going through butter, right? That's a signature showing you that, hey, this move right here could have been the manipulation, right? The unwillingness to want to go back up in there, right? We form a bearish order block and respect the bearish order block, and then get a real break in market structure, right? Because that low to that high, right? This is your new dealing range. This is your bullish dealing range, right? Once you trade outside of that bullish dealing range, you have a break in market structure to the downside. That right there, right, is your confirmation that, okay, price is looking down, right? Price is looking down. So you're looking for targets to the downside, okay? Looking for targets to the downside. Being mindful that price has been very tricky, but you're not looking for targets to the downside. And if you're looking for targets to the downside, right, what's your next reasonable target? Remember, we said when we come to our upper quadrant, we're looking for a deeper pullback, right? We come to the equilibrium. We got a break in market structure, right? So where we looking next? That lower quadrant, right? Once we get to that lower quadrant, right, what do we say? Once we lose the lower quadrant, we're looking for price outside of the dealing range. We talked about this, right? When you lose the lower quadrant, you're looking for external liquidity. When you lose the upper quadrant, you're looking for external liquidity. All right. When you lose the lower quadrant in a bearish dealing range, in bearish order flow, you're looking for external. When you lose the upper quadrant in bullish order flow, you're looking for external liquidity. All right. Then you say, well, Tim, we got above the upper quadrant here, right? But this is a retracement inside our sale program, right? So you're looking for it. Remember when Michael talks about, when are you looking for bullish breakers? You're looking for bullish breakers and bullish order flow, higher time frame bullish order flow. When are you looking for bearish breakers and higher time frame bearish order flow, right? You're looking for these things when it lines up with your higher time frame order flow. All right. So we lose our lower quadrant, right? We're slowly extending our bearish dealing range, short-term bearish dealing range inside our overall dealing range, right? So now since we lose this, now we're looking for external liquidity, right? And then as we see here, right, we come down, retrace back up to a premium, manipulate out buy side, right? Trade back up, take out buy side, stay there for a minute, then we drop down, right? Take out the low, retrace back up into a premium of our range, right? This is the area we was talked about today, right? On the pre-market analysis, came back up into our area and then come down. But notice where we went back up to, right? Now we didn't talk about this area on the pre-market. We talked about some other stuff on the pre-market, but just looking at our bus stops, right? What did price trade back up to before dropping down and taking out the weekly low and trading down to the higher time frame low back over there? That lower quadrant. Man, y'all do me a favor, man. Hit a like for the algorithm and subscribe to the channel if you ain't subscribed, man. yeah. Please do. Please share this with somebody who y'all think might get something out of this, right? Is this starting to make sense? Let me ask y'all a question, man. Is this starting to make sense to y'all? Is it starting to make sense? Can anybody? Has anybody? Somebody said he's on fire.
Let him cook.
Somebody said he's on fire. Anybody got anything for me, man? Any questions? All right. Any aha moments? Anything anybody want to share? Shout out Father Legend. I saw Father Legend say something about he snatched some money out the market today. He closed a little bit early, but he was able to snatch some money out the market. Did anybody else get a chance to trade? Anybody take some money out the market this week or today? Anybody get a chance to trade? Anybody get a chance to take read if you're not trading yet? Anybody care?
I papered earlier and made some money.
You did some paper trade. Went earlier today or earlier this week?
Earlier today, when we opened up, we were for that latest run, we were around equilibrium, and I just been studying. And you said that the market, if it takes like the previous day low before you have a chance to participate, sometimes a lot of times it'll go back and that'll be its target again to allow participation. So I found a setup and I went back down to that previous day low.
Okay.
After it broke structure in that little area.
That's what's up, man. Congratulations, man. I'll give it up for your mother, man. Hard hitting executions out here. Based off the stuff that we studying, man. Based off the stuff that we are studying. Let's go ahead and drop down. We'll drop down to sounds like an intro model to me. We'll drop down to 15 minutes. As y'all can see there, little Timmy Rogers was looking at the market in the afternoon session. All right. I did a little morning trading, and then I came back in the afternoon and did a little afternoon trading too. All right. Came over here, did a little afternoon trading, but as you can see, I still got some stuff on the chart from the afternoon with the opening range, high and low for the afternoon session. But that's neither here nor there. Let's go ahead and put on our indicator to show us the New York session. All right. And we gonna 15 minute ain't really giving me what I really want today, so we're gonna go to just drop down to a 1 minute chart. All right, we're gonna drop to a 1 minute chart and we're gonna squanch it up real tight for a minute, and we're gonna look at just as we can see, based off of our weekly range, I think that is we got marked out. Is that our weekly range? Yeah, that was our weekly range. We talked about that, right? So based off our weekly range, we see that at now, I'm gonna broaden it out for us, but we're just looking at this real quick. Coming into pre-market, right? Coming into pre-market, we opened up and we traded back up into that lower quadrant, right? Once we traded up into the lower quadrant, we broke down, right? Got a break in market structure, taking all this sell side, this trend line liquidity out right here. Took out all this trend line liquidity, and then we traded back up into a premium of that bearish dealing range right there. Then we broke down, traded down, took out the daily low, took out the previous day's low. Then we sat there and engineered liquidity for a while, right? Then once we did that, we broke down here, right? Created relative equal lows, traded back up into a premium, taking out buy side, and then broke down again, right? Taking out the weekly low, trading into the weekly low. That was the higher time frame low we were looking at after getting our bearish Judas swing. All right. Then you think, how far can it go after taking out that low? That's where that weekly low came into play, from way back over there. All right. And so now that you see how far can it go, right? You're looking at that after we created our afternoon opening range, right? Took out the liquidity, creating the opening range, traded back up and took out buy side, right? After creating the opening range, here took out buy side, and then we broke back down. All right. So what type of signature is that? We created a bearish dealing range, right? Right, created a bearish dealing range. We took out, right, sell side, traded back up, took out buy side, but failed to show a willingness to continue going up, quickly reversed and took out sell side again. That's a continuation signature. That's not a reversal signature, because we created the bearish dealing range, our high there, our low there, right? And then we traded back up into a premium, but failed and extended the sale program, right? That's a continuation pattern. So once you see that continuation pattern, now what are you looking at? You're looking at this to be treated as a balanced price range. And how far can you go? What's our next liquidity? What's our next PD rate? What's our next whatever you're looking at? And in this case here, the only thing that was there was that sell side liquidity from way back when, right? And as you see, we just calmly made our way all the way down to that liquidity, and then made our way all the way back up and closed just inside of the range. All right, now that we see what price has done, now let's go back and see what kind of magic we can see. Right, now we saw what it did with our weekly bus stops, right? We saw that price traded up to the lower quadrant, traded down to the low, right? Bus stop, all right? And then we traded outside of that range. Okay, now since we traded outside of that range, okay, now looking at our, right, let's look at our range just from today, right? So if we come here, this is our range, right? You just keep taking it lower, there, we just keep taking it lower. Why we just keep taking it lower? Because we're slowly extending our range, right? We came down, this was our range, right? Traded back up, came down, this was our range. Traded back up, came down, this was our range, right? We just keep extending our range, right? Keep extending our range until at the end of the day, right, this is what we're working with. All right, now let me go in here. I'm going to hide our overall range. All right. I'm gonna hide our overall. Matter of fact, I'm just gonna hide everything except for what I'm doing right now, so that we can really focus on. So that we can really focus on what we talked about and not get distracted. All right. So, y'all know I got to get it right on the high. Got to get it right on the high. This is my highest high right there of the day. 58.75. 58.50, yes. Okay. That's my highest high. And this is my lowest low. All right. So that's my highest high. And that's my lowest low for the entire day. Now we're going to work backwards from here, right? Once we made that low, right? Once we made that low, what did price do? Price came back up, got to that lower quadrant, and started to consolidate right there, right? Why is it consolidating there? Because it feel like it? No. Because that's a place that the algorithm recognizes. The algorithm recognizes this level. It recognizes that 24,143 and a quarter, right? It's recognizing that level. Tim, how do you know it's recognizing that level? Look what it's doing. It created a bearish fair value gap there, right? It created order blocks there, right? It created mitigation blocks there. It created fair value gaps there, right? It recognizes that level as something important. Okay. And that's just after trading down into the sell side liquidity, right? Coming up here, getting a nice break in market structure right here, right? Trading back down into it and then expanding up a little bit more. Okay. You see that there? Now, let's go back. We're going to reverse engineer this. All right, so we said this was the pre-market, right? We came up here, traded up there, then we broke down there. Let's look at that breakdown. Come here. Hide you. Right? I'm gonna slowly walk through this until somebody understands. Right? That's our high. Right there. Where's my dot? Where in the world is my dot? Okay, more than one way to skin a cat. Okay, come here, drop down. That's our lowest low, right? What did price do? Price trades back up into a premium. See that fair value gap right there, right? We break down, right? We got a breakaway gap there, right? All this right here is a balanced price range. What's up there? Trap traders. Quick little V shape there. Trap traders, right? Quadrant level, quadrant level, quadrant level, right? Trade back up into a premium. PD array resting at a quadrant level, right? PD array resting at the balanced price range, right? We trade up, right? But look over here, right there, right? That's the first imbalance created before we took off there. Came back, got that change in the state delivery, right? Traded, boop, right up into it, right? Right into it at this balanced price range, at this quadrant level. Hate when I do that, but y'all get it, right? Y'all get it. Boom, right? So then we come back here, right? Then we come and we drop down, right? We're dropping down, leaving this area right here. This is a balanced price range right there, right? This is a balanced price range. So when we're coming down, we got our balanced price range there, right? As we come out of that area there, right? Now we're coming back down here, right? And we come here. This is when we're leaving that area. This right here is from our order block down, right? And you say, Tim, we never came back to a premium of our latest dealing range, right? Remember what we said, right? When you clear a balanced price range, right? When you clear a liquidity, when you clear an area, you don't want to see price digging back up into that area. So from there to there, right? That's our latest expansion, right? What's this right here? That's equilibrium, right? What do we say about the premium and the discount, right? If you put the premium in the 4th grade and you put the discount in the 4th grade, right? What does that give you? Right? That gives you a full dealing range outside of that area. So you can come from that low there, right? You can come from that low there, book up to that low right there, right? And you can use that as event horizon. That's if that ain't tendonism. If that ain't tendonism, oh Lord, I done broke something. If that ain't tendonism. You can use that as event horizon, right? And then if you notice there, if you notice there, right? Let's get our stuff together, right? Right? Let me get our stuff together, right? So we get to the low, go to the sell side there, right? Swing low, right? So you're looking at 2 liquidity pools. Swing low, right? It comes back up, and where does it come back up to? Let's spread this out. All right, let's spread this out. You have event horizon. You got the upper bus stop. You got a imbalance that's in line with that upper bus stop. Price trades up into that imbalance that's in line with that upper bus stop, and we get on up out of there. Get on up out of there. Man, y'all do me a favor, man. Y'all hit a like for the algorithm. Yes, it is.
Let him cook! I said let him cook!
I think that's all I got for today, man. I can't keep doing this. I can't keep doing this. I can't keep doing this, man. I can't keep doing this. Hey, man. Do me a favor. Hit a like for the algorithm. If you ain't subscribed to the channel, man, please subscribe. And again, if Valdez kids looking at this, man, I salute you with both hands. Uncle Tim appreciate y'all, man. Y'all keep doing great and wonderful things. And hey, man, y'all next. Y'all up next, man. Y'all up next. Go change the world. Hit me. Hey, anybody got anything for me? Any questions, concerns, comments? Y'all give it up for yourself, man. Give it up for yourself. You know what I'm saying? For the dedication of wanting to, you know what I'm saying, better yourself as a trader. Better yourself at understanding how to read price action. You know what I'm saying? Yeah, it's a lot of money to be made in this game. But if you're doing it uneducatedly, or if you're doing it without like something that's like concrete or something that's verified, you just gambling, man. Might as well go out there to Shorter, go to Shorter, Alabama, to the casino. You know what I'm saying? Wherever you from, if you from Mississippi, go down there to Biloxi. You know what I'm saying? If you from Vegas, you know, go to the Strip. You know what I'm saying? If you from up there in Jersey, what's up there in Jersey? Around Jersey, Atlantic City, ain't that's up that way? You know what I'm saying? Man, shout out Valdez in the building, man. Y'all give it up for Valdez in the building, man. Y'all shout out Valdez in the building, man. What's going on, man? Hey, Valdez, tell your kids I say they up next, man. They up there. They gotta pick up the torch, man. They gotta pick up the torch and run with. I already know y'all they stealing it in them. They still small now, you know what I'm saying? They be soaking up game and they don't really be letting you know they soaking up game, but I know they soaking up game. Just tell them I say they up next, man. They gotta take baton and run with it. Right? Hey man, that's all I got. If y'all ain't got nothing for me, we're gonna go ahead and call it there. Hopefully y'all got something out of this, man. Hopefully y'all kind of see the fractal nature of price, time and price. You see the ebbs and flows of price. You can kind of see, you know what I'm saying, when prices consolidate and you wait for it to tip its hand. Once it tips its hand, you know exactly where to be looking for those high probability setups, right? And if you still don't see it, man, we're going to keep pulling up here and talking about it, man. We're going to keep pulling up here and talking about it, right? I'll drop the gems from the live stream tomorrow. Remember, the first video that drops at 9, it's from the higher time frame. The second video that drops at 12 is from when we drop down to the intraday. Then the third video that drops at 3 is for when we go into the New York session, right? That's the way we break it down, man. Hopefully y'all had a good week. Hopefully y'all had a productive week. Hopefully you was able to learn something. If you wasn't able to learn something, make sure you learn something next week, because the market gonna give you another opportunity. You feel me? Hey man, till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action, it's your boy Timothy Lee Rogers Sr., aka Aranya Gundy. That just mean big spot if you don't hablo español. Y'all be safe out here in these trading streets, man. I'm gone. Yeah.